But let's start the program with the current profit reporting season. So far, generally, it's been good and is reflected in broadly higher share prices. These results, though, are recording the past. It's the future that's more important, the outlook. Edward Boyd wraps it up.
A softer landing. It's still going to be a short, sharp contraction in that scenario.
We see the trends that are underway on the decarbonisation front. We know how metals intensive that is.
Obviously, we worry. We're retailers. It's never good when household budgets come under pressure.
There's been some pretty seismic shifts in the economic environment, the geopolitical environment.
We do definitely see impacts from a tight labour market.
As long as there are people who are willing to sell and buyers there to attract those vendors, our market can continue to perform.
The view of the future of Australia's leading CEOs is critical this profit season, not just to their share price, but to the future of our economy. For retailers like JB Hi-Fi's Terry Smart, the worry is that rising inflation will dampen consumer spending.
We just stay focused on those things we can control. And that all revolves around the customer, and we'll continue to do that. And that will hold us in good stead, regardless of what may happen in the economy. And again, being that value-based retailer ensures that we will remain top of mind for consumers.
At Australia's biggest bank, the concern looking ahead, seeing an economic slowdown and wondering how serious it will be.
I think what we are optimistic and believe is possible is that a harder landing, or certainly the scenario that's facing many other economies around the world, where inflation is much higher and rates are going to need to go up further and for longer, that would clearly have a bigger overall impact. And we believe that can be avoided in Australia, and we're certainly hopeful to do anything we can to support that.
For mining giant BHP, much of its management time is spent identifying global megatrends that will drive the future, including decarbonisation and feeding the world's rising population. This thinking is also behind an $8.4 billion play for copper and nickel miner Oz Minerals.
That's correct. Copper, nickel, really attractive alongside potash. But as I said, we have a number of levers available to us to unlock growth in those attractive commodities. First focus is on unlocking more from the resources that we already have. Second focus then is on exploration and early stage entry. On the potential acquisition front, we will remain super disciplined. I'm very keen to ensure that we continue this track record that we've built up over the past 6+ years of disciplined allocation of capital, and first focus is on the levers that we have greater control over in terms of unlocking more from our own resources.
Some know their businesses are vulnerable to shock, like corporate travel management. Its chief executive, Jamie Ferris, takes a deliberate strategy to have no debt, which is unusual among public companies.
So unlike a BHP, we've got no assets to hide it. We've got office chairs and so forth. So the mentality ever since I started the business 27 years ago was to be not have any debt. Now, sometimes you could say you could leverage that, but through the crisis, it played out very well for us. So when everyone else was scrambling, we were buying distressed A-grade assets that no one else could afford to do, which is great now, because at the other end on a full recovery, we're going to be 75% bigger.
The financial year was also characterised by house prices in Sydney and Melbourne falling and rising interest rates. But property company REA Group, majority owned by News Corp, the owner of Sky News, says it's unconcerned.
And we're going to see a few things that are going to help us with a softer market. Firstly, the number of people selling what we call off-market or non-advertised, that is absolutely going to come down, and they will come back on site as the market softens a little bit. But the other thing that applies is that the logic of buying the best products on the best site in a softer market absolutely hold true, and we get a sort of counter-cyclical benefit of a softer market from that.
It was Telstra chief Andy Penn's final profit results at the telco, and he remains optimistic.
I think our business is as well positioned as any and better than many in relation to the economic uncertainty. We've got a strong balance sheet. There's a lot of natural hedges in our business. There's CPI increases built into our partnership and our revenues that we get from the NBN. And we've actually just concluded our enterprise agreement negotiations for the next couple of years, which lock in pay rises at about 2.5% and 3% over the next 2 years.